basically Bitcoin, just think of the digital gold story. That's a very nice, collateral, valuable, simple, you can't dilute it. Everybody knows that story. So that's simple. The others, really, they're all smart contract platforms. What they are, technology networks. And you as a consumer, let's say you're an institution, have a choice of what you want out of your network. If you want ultimate security, you're going to use Ethereum. If you want fast, cheap, and effective, Solana's been doing great. And if you want even faster, even cheaper, and programmable in new ways, but newer, so it's riskier because you want to make sure that it actually succeeds, then it'll be Sui, which came out of Facebook.
The crypto market has taken a hard hit recently. Bitcoin's sharp pullback and heavy losses in altcoins, many down over 30%, have left investors uneasy. Global liquidity tightening, Fed uncertainty, and risk-off sentiment have all added pressure. Yet, Raoul believes this correction is not the end but a rare setup for long-term investors to accumulate future winners at discounted levels. Pal argues that despite short-term volatility, blockchain adoption is still in its early stages, similar to the early days of the internet. He highlights Bitcoin as digital gold, Ethereum as the most secure settlement layer, and Solana as a faster, efficient alternative leading innovation. These, he says, will form the foundation of a new digital economy where finance, identity, and data exist on-chain. Looking ahead, Pal predicts crypto users will surge from 1 billion to 4 billion by 2030, driving the market toward a $100 trillion valuation. In his words, we're only a few steps into what could become the greatest macro trade of all time. Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
Yeah, I mean, obviously, these digital assets have been around for quite a long time now, over a decade. And most of the time it was retail participation. And even with stable coins, that was a retail thing. Tether was really, Asian retail being able to send money around the world and South America. And then it became Asian corporates were using it to get around capital controls. So like Malaysia to China, stuff like that, to get around the FX cross rates. So we saw a bit of that. And then this year, as soon as obviously MiCA regulations in Europe came, and then the US just basically opened the door to it all, we've seen an absolute explosion in the space on the institutional side. So when we look at the adoption of the space overall, it's been growing. When we kind of rebase it to 5 million active wallets versus, let's say, 5 million IP addresses back in the early 90s for the internet was the fastest adoption of any technology the world has seen. Right now, crypto, since that date, has doubled the speed of the internet adoption. So it's been the fastest adoption of any technology, and it's now been superseded by AI. So what we've seen is massive adoption. We've now got 950 million active wallets. It's projected to get to about 4 billion by 2030. So that's going to be half the world. Now, most people have multiple wallets, so it's not fair, but so we're seeing that. So wallets are becoming more normal. And then we're seeing the institutions building all of the rails. And stablecoins is the killer app for institutions because it's just faster, cheaper, more efficient. So we're seeing everybody from Visa to MasterCard to PayPal to you name it, all using these rails. And we're going to see corporates doing it as well. So multinational corporates can move money around their corporate headquarters. Let's say you're a metals and mining company and you've got operations in Angola, Nigeria, Brazil, right? You need to move dollars around the world to pay staff, do stuff. It's actually hard because a lot of them have capital controls. But if you have an internal stable coin, okay, that makes it really fast and efficient. So I think there's a lot coming. So the way I look at it as we're a $4 trillion asset class today. If I compare it to global equities, 200 trillion, global real estate, 300 trillion, global bonds, 250 trillion. So we're nowhere there yet. So if I just look at the trend rate of growth, I think we get to 100 trillion by about 2032. So that means we're only 4% of the way to 100 trillion. And that's still half the value of global equities. Now, what is the value of this thing if all equities, all bonds, and all real estate go on chain? I don't know. It's obviously not the value of the whole thing, but it's still going to be a large value. So all we're saying is we're 4% of the journey there, which makes it what I've said is the greatest macro trade of all time, because you've got this adoption curve of a technology. And unlike the internet, you can actually own a fraction of it via a token. It's amazing.
How do you see DeFi, gaming, real world asset tokenization? You got a guess on what are going to be the big sectors?
I don't, but look, we know that, as we said, asset markets are going to get tokenized. There's a lot of people who want to tokenize real estate, but I'm not sure there's buyers of those tokens. All the real estate people want to sell tokens to find more liquidity. We're seeing the asset management industry, people like Apollo and stuff, talking about tokenizing theirs. I think what they're trying to do is find new buyers for private equity. So that kind of, I'm not sure how big that is compared to equities, which is a very efficient way, bonds, money market funds, that kind of stuff. I think that's really efficient. Gaming is a huge market. Billions of people play games, super active, and they exchange assets. And most of those assets, you can't move from one game to another. So you can't have value, because if you lose your login, your value's gone and all of this stuff. So it solves that. Even bigger than all of that is actually the move from Web 2 to Web 3. And that's stuff like digital identity. Right? That's an 8 billion person TAM.
Yes.
We're all going to need it when it comes to AI, right? Who's a human, who's not? Then you have this nice technology like zero knowledge proof. So that means that Drew can verify all his documentation, but he can remain anonymous online, and it can be proven that you've passed all your KYC, and then everybody can accept it. So that, we've seen stuff like that being done in India with Aadhaar, and that was a $1.3 billion digital ID. But we're going to see this at scale across the internet, and you'll have multiple digital IDs for different purposes. So we've got that. We've got putting of basically any verified information on chain. If you think of an NFT, a non-fungible token, what that really is a contract. So then when you think about it, okay, well, that's probably the insurance market because there's big value and it's settled on an outcome. We're seeing that with prediction markets, gambling, they're big markets. But we'll also see it with all ticketing. Basically, every ticket is more efficiently done as an NFT, and you've got other things you can build social graphs and stuff around it. So
and community tokens, whether it's Taylor Swift or Chelsea Football Club, right?
That's right. And so the scale of this thing is much bigger than people still understand. And so even at $100 trillion, what is the value of the internet today? That's kind of the question we're asking. What is the value of this? It'll be probably one of the most valuable things humanity's ever had, because it is, for the digital age, the global store of value, transaction layer, contract settlement layer. Now, everything that humans do is basically a contract. Even you and I today was like, it was an email, but it was like a written contract says, hey, I'll turn up today. All the people watching this, it was a contract. Every time you buy something in a shop, every time you use a credit card, they're all contracts. And a lot of this can be done much more efficiently via these rails.
Raoul Pal says this isn't just a crypto correction but a global shift in how money, identity, and ownership work. Bitcoin has matured into digital gold, trusted by institutions, while real growth is happening in blockchain layers powering the next internet. With nearly 1 billion active wallets, crypto adoption is now outpacing the early internet. He believes stablecoins are driving this change, giving payment giants like Visa and PayPal faster, cheaper systems. Pal predicts the $4 trillion crypto market could surge to $100 trillion by 2032, calling it the greatest macro trade of all time, as investors can now own a direct piece of this technological revolution.
So basically, Bitcoin, just think of the digital gold story. That's a very nice, collateral, valuable, simple, you can't dilute it. Everybody knows that story. So that's simple. The others, really, they're all smart contract platforms. And what they are technology networks. And you as a consumer, let's say you're an institution, have a choice of what you want out of your network. If you want ultimate security, you're going to use Ethereum. It's been around longest. It's got the most number of nodes on the network. It's got, the highest value settled of all. If you want fast, cheap, and effective, Solana's been doing great. And if you want fast, even faster, even cheaper, and programmable in new ways, but newer, so it's riskier because you want to make sure that it actually succeeds, then it'll be Sui, which came out of Facebook. So these are like thinking about cloud storage or other big network things that you use. That's what these are. And people confuse it because the word currency comes up in the title. The currency part is basically, think of it as the equity of the network. It's the value of the network. You also need to use that token to have a slot on the network. So you're paying for a space on the network in a native equity token. That's really all it is. And they're just technologies. And it's like breaking down component parts of the internet and being able to do that all over again. And so when you build these rails, you've then got things like decentralized storage layers. So right now, if you're an institution, you're probably storing everything that you do. Either you have to have your own massive mainframes, which is expensive and out of date, or you're using AWS or Microsoft Azure. So you've got now all of your private data with some giant corporation who the US government can actually get the information from. Well, maybe there's different ways of doing that to make it more robust to hacking, to make it more robust from state level attack. And that's decentralized databases as well. So there's a lot happening within this space. And those three are basically the pioneers of what are known as layer ones, the kind of settlement layer of this new internet.
So what for the institutional folks, what do you think is the biggest misconception that you see people who are new into the space or people who are not going into the space? What do you think the biggest misconception is?
The biggest misconception is what derives the value of a network. There's nothing backing it because they're thinking about currency and they forget that, what's the US dollar backed by? Yeah, guns. There's nothing else, right? So it's guns. What's the Aussie dollar backed by? Guns.
Iron ore.
Yeah, but it's not a true backing, right? So all money is actually a social consensus mechanism. Even gold. We decide gold has a value because
you can't eat it.
Shininess, and you can't get rid of it. It doesn't destroy easily. So it's a great asset. The perception is what is the value of these things? Why is this thing worth $500 billion in the case of Ethereum? And what people need to understand is the value of a network. So a network is like Amazon is a network of goods and services, including cloud storage and a whole bunch of other things. Network of buyers and sellers, and it's huge. It's one of the biggest in the world. What is Google? It's a network for us to exchange, to get involved in, whether it's search or social media or other things. And it's also an ad exchange, the largest ad exchange in the world. And a whole bunch of value goes on the network. Facebook, same. All of these things are network businesses. So these are just networks. They're decentralized networks. And how does a network derive value? This is where a lot of people go down the route of, well, I want to understand the cash flows. And then it doesn't add up. Much like Amazon never added up with cash flows, and Tesla doesn't add up today with cash flows because they're valued as networks. And a network is derived by Metcalfe's law. Metcalfe's law is how you value a network, which is the number of people on the network times basically the total value transacted on the network. And so as you have more activity on this network, as people build new things on it, it becomes more and more valuable. The more people come, the more valuable it is. So you can have something that transacts between two people, a real estate deal. That's not a network. It could be $100 million property, goes between one to the other. But now if you've got a network of buyers and sellers on a platform, let's call it Zillow, or you've got one in Australia, which is
realestate.com. Yep.
Realestate.com. Realestate.com, you've got buyers and sellers transacting. Then you've got advertising, lawyers, everybody, right? The value of that is much more than the cash flows. And that's how these things are valued. And these blockchain networks are also super fast growing. They're fast growing because the number of users is going up a lot, twice the speed of the internet, and the value transacted is going up. So that's why they accumulate so much value so fast, because of all of the functionality of what you can build on these networks and how fast they're growing. And that's why on a cash flow basis, people don't understand it. They say it's not backed by anything because they think about currency. It's not. It's basically a share of a network and you own it, unlike which we couldn't do in the internet.
Raoul says the current crypto volatility is just noise. Adoption is accelerating faster than ever. Bitcoin, Ethereum, Solana, and Sway each represent a key pillar of the new digital economy. Bitcoin as digital gold, Ethereum as the settlement layer, Solana as the fast consumer chain, and Sway as the innovation frontier. Together, they form what Powell calls the intelligent internet, where blockchain and AI merge to redefine ownership, identity, and truth. He believes this isn't the end of the story, but the start of the next big accumulation phase before exponential growth. The networks with the strongest fundamentals and user growth will lead the next decade of digital finance. So, which project do you think will dominate the next crypto cycle? Bitcoin, Ethereum, Solana, or Sway? And how do you see AI and blockchain shaping our digital future? Let me know your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.